Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane, I'ma do it all for you. Come along and see it's true.
Hey everybody, welcome to another episode of Opie's Office. This time we're going to go ahead and take a step away from what we were talking about last week. So last week we covered a little bit about late payments on your credit report. And that's something that came up last week. For me, a handful of times. So that's why I covered it. This week, I had somebody call me yesterday. It's actually a very, very close friend of mine. And he called me and he had some questions for me. And it made me realize that maybe this was a good topic to have a video on today. So he called me yesterday and says he's ready to buy. He has no idea where to start though. So he came to me. Naturally, that is where you should start in most cases, your real estate professionals, whether it be an agent who can link you to me or me myself, and I will link you to the proper agent for your scenario. But regardless, he had no idea where to start. Didn't know what a credit score he would need to have, didn't know what kind of down payment options he had. So I'm thinking we need to go back to basics. So we're going to do a couple of different videos throughout the next week or so. I'm going to cover conventional products, FHA products, and USDA. We'll go into a VA loan option a whole lot later. It can tend to be a little more in depth, so that's something that we'll cover. But for right now, we want to kind of cover something that everybody can use, and those are the USDA, VA, or USDA, FHA, and conventional products. Today, most specifically, we're going to just focus in on the conventional product. It is one of the most common ones you see, and it is kind of the one that's created the myths towards a lot of the things you think of when you think of mortgage lending. So a lot of people tend to think that you need an 800 credit score, 750 credit score, and 20% down to buy a house, and that is just simply nowhere near the truth. You can get a house with anywhere as low as a 550 credit score and 0% down. And you don't have to be in the military to do 0% down. The USDA option allows that. But for conventional products, you tend to get a better rate if you have a 20% down payment and an 800 credit score, but it doesn't mean that you can't qualify. The minimum tends to be, depending on the bank that we would shop it with, tends to be right around 620 with your FICO credit score. At 720, even up into 740, you tend to get the best pricing. But it doesn't mean that you're going to get a terrible option when you go down to a 620 FICO score. It just means that it might cost a little more for you to do it. But there are some major perks to a conventional loan that even if you were on the lower end of the credit score, you could definitely take advantage of. So the biggest one of those is mortgage insurance. With the FHA product that a lot of people tend to go to if they have a lower down payment, you have mortgage insurance for the life of the loan. It's 30 years, sometimes 15, but for the most part 30 years that you're going to be paying what could be $75, $80, $100, $150 a month for mortgage insurance. This is something that if you have a conventional product will drop off. It'll drop off, or maybe you never even started. If you have 20% down payment at the initial purchase, you're never going to have mortgage insurance. Anything that you have acquired into your product up until you get to around the 80% mark. So if you owe $100,000, once you get it to around $80,000, your mortgage insurance will drop off again. So there's that option that a lot of people don't realize. When you have a conventional product, at some point in your life of the loan, your mortgage insurance is going to go away if you even have it. Along with the mortgage insurance myth, a lot of people think that the 20% down is the only way to avoid mortgage insurance entirely. And while for a lot of people this is the case, when you talk to a broker like we are, you'll find that we actually have a 10% down, no mortgage insurance option, which is really good because now you don't have to have anywhere near as much money up front, and you would then be able to save yourself monthly. So that's a really good thing that the conventional product can offer you as well. The couple of other things that it does that make it a good product and one of the better products out there, just a simple conforming conventional loan, is that the appraisals aren't necessarily as strict. So with the FHA or the USDA or VA loans, you're backed or insured by the federal government, so you have to qualify under the appraisal rules that they use, which require very specific things for paint and handrails and septic tanks, and none of that stuff tends to hit with a conventional product. They're more so just looking at the value of the home. So you get a lot more relaxed appraisal when it comes to a conventional product. You don't have to conform to all the government restrictions as much. So that's another really simple part about a conventional loan that makes it pretty smooth. We tend to run into little issues when it comes to a conventional appraisal. The other big thing that comes into play when it comes to a conventional mortgage is the sales price. So with an FHA USDA loan, you actually have a cap as to how much you can buy your house for. Depending on the product and your income and the income of the area around you, it's somewhere around $280 in Erie. I think it's $284 to be specific, Erie, Pennsylvania. But for a conventional loan, they actually just raised it again. $484,350 is where you can go to for a conventional product. Beyond that, you have to go into what they call a non-conforming jumbo loan. That usually comes with a bigger down payment requirement and also much higher rate. So $484,000, $350 after is going to get you a whole lot of house in Erie. So that's something that really helps sell a conventional conforming product. Is that so? Just to kind of sum it all up, $620 is the minimum that you would need in most cases to qualify for a conventional loan. $720, $740 is going to get you your primo pricing. The appraisals are better. You can do as low as 3% down, 3, 6, or 9 in some cases of seller's assist in percentage, 3, 6, or 9% seller's assist. Your mortgage insurance may never exist, and if it does, it's going to drop off once you have 20% equity in your house. It's a really good product, and it's something that a lot of people love to use because, like I said, it's just a super clean option. There's a whole lot less restrictions as to what we can do with it. So if you've got a scenario where you're above a 620 and you think you could afford even a 3% down payment, it's definitely something you should ask your mortgage broker about. We have a handful of banks that we will work with to get you some great pricing. So that's it for today. I want to say again, thank you for stopping by, and look for my FHA, my USDA. Eventually we'll do a VA, maybe even I'll throw the campaign hat on for it. But and then we'll keep going with the credit videos a little later. But like I said, I wanted to get some Mortgage 101 down to kind of help educate everybody and see what kind of comments, what kind of feedback we can get, see what we need to do next. And I'm going to try and go every week and say, hey, what do you think I should do? I got a lot of realtors online that have added a lot of really good insight, and I have some friends who have added a lot of good things that they think they want to hear about. So I'm keeping tally. We're going to go through them every day. But like I said, I just had a call yesterday that kind of reminded me that we need to stick to some basics every now and then. So that's your conventional product options. Those are some ins and outs, some small tidbits about it. If you want to know more, obviously just give me a call. I'll be here. Thanks. Bye.
Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane, I'ma do it all for you. Come along.